While Singapore's non-oil domestic exports grew slower in April at 6.4% on year, maintaining its 17th straight month of annual expansion, it eased from the previous month's 7.7% growth. Now, non-electronic exports grew 4.6% on year, lower than the 6.8% previously. Specialized machinery and ship structures contributed to most of its growth. Electronic exports grew by 12.8%, extending the previous month's rise. Integrated circuits and its related component parts boosted the segment. And one analyst expects a strong demand for electronics like semiconductors to continue for this year.
The overall shortage of semiconductors, as well as the increased demand, across, the various, importers of this commodity, has been, supporting the price of semiconductors and the demand of semiconductors. And this would likely continue, really, given the fact that the drivers behind the demand for this, semiconductors and electronics, it's still growing strong. And that includes, the 5G market as well as the automation.
Total trade in April grew by almost 22% annually, with exports to Singapore's top 10 markets rising as a whole. There were more shipments to Taiwan, Malaysia and the US. However, exports to China, Hong Kong and South Korea fell. And an analyst says Singapore's trade outlook is resilient despite headwinds like China's slowing growth and global geopolitical tensions. He expects full-year non-oil exports to grow at 5%.
Demand appears to remain fairly resilient, even as prices rise and even as consumers sort of complain of a higher cost of goods and services. For now, they're still taking the higher prices in stride and they're still buying stuff. Perhaps this is to do with revenge spending, etc., or to do with revenge traveling. But for now, it looks like there is still some momentum that's lifting overall exports, and that's keeping the region's factories still relatively busy, and Singapore's exports also still relatively firm.